Okay, it is Thursday after the close, May 13, 2010, and I'm Dennis Hudson. It's orangequant.com time. Got a SPY forecast for you, a daily forecast. Stay with me until this logo gets out of the way. And while that is happening, you want to get your copy of the FLIR 2 ebook. I keep asking myself, why is it that some people would rather be given a fish, which I just did 2 days ago? I gave you a fish. You'd rather be given a fish than learn how to fish. And FLIR 2 will teach you how to fish with these fantastic tools of synthetic trend lines and H205, tau, and iota. You really need to get yourself a copy of that so that you don't have to depend on me. I could be wrong in misinterpreting or drawing things wrong. You need it for yourself so you can use it on other stocks. Okay, let's get on with the forecast. First off, right off the bat, I told you so. I mean, I don't want to be one of those people who says that, but I told you so. Tuesday, I posted a video here. I said, guys, if you see that we bump into like about 118, then go short. Now, by the way, this light blue candle on the right, that's tomorrow's possible candle. We'll talk about that in a minute. The red and the white candle here, that's yesterday and today, Wednesday and Thursday. And I told you, Tuesday, and these blue ones, these blue stripes here, those aren't very well drawn candles. This is all from the previous video. So anyway, I told you, if it bumps into 118, short it, and look what happened. Look what you could have done. And I mean, that was, that was a decent piece of change for a drop. It was more than a buck. What the heck was it? It was like, $1.50 or something like that. I don't know. Whatever it was, it would have been good for you and good for your portfolio, especially if you had been trading options. For example, on your May 115 put, the day's range on that was 65 cents to $1.27. Gee, for an entry price of 65 bucks a contract, you could have nearly doubled it in one day. You don't get that on stocks, not stocks like this. So all you had to do was listen, and I told you so. And if you had FLIR 2 tools, you'd have figured it out for yourself. Get that FLIR 2 ebook so you can get some sleep nights. And yes, I did take my own advice. I shorted it with puts very early today. Actually, well, no, it wasn't that early. I can't remember exactly what time it was. And then I wrote them down. But mine were a bit more out of the money, so there wasn't as much movement, so I'm still in them. And looking at tomorrow's candle, and that brings us to a discussion of that. All right, the blue and pink synthetic trend lines are the ones from the previous forecast, and those are the more reliable trend lines, or I should say not more reliable, they're more durable, they last longer. The new trend lines synthetics that I've drawn here are the purple and the green, which are much narrower and closer together, as you can see, which doesn't mean it's less reliable. It's just that they happen to be, and they are of a shorter term. So, based on those new trend lines, the purple and the green, what we have shaping up is for tomorrow, which we still got an upper end resistance at about 117.80, I would say, and then we have support showing up right about 115. Now there are two tricky things here to know about. One is that for the quarterly, we still have headroom to go back to the 121 level and retest that. Never forget that. On the other hand, for the daily, we've got this more durable or more longer lasting lower blue synthetic, and you can see that goes all the way down to about 106.50 or 107 around there. But what I think we have on tap is that upper blue trend line, synthetic, is a boundary for tomorrow, resistance. So that's about, as I say, about 117.80. Support, again, is about 115. Now, here's a little caveat. If tomorrow you see it break, and this is just like I told you Tuesday night, similar forecast, if you see it breaking down, though, this time, and it crosses down below about, I would say down to 113, thereabouts, if it breaks below 113, at that point it's catching the 404ville Express to Never Never Land on this lower green synthetic trend line here. It would then start to follow that down to the right, trying to hop a ride down to this lower blue synthetic, which is the more durable. I honestly don't expect that, but you never know, and the market is very jumpy right now, as you have witnessed. Also note that tomorrow marks an inflection. It's a very short-term, local type inflection, this cross right here that I just circled. And that would mean that there's a good chance price is going to ride back up on that purple synthetic that's going up to the right. There's a good chance of it. If it doesn't, as I say, crash down through that 113 level. And as always, we have your friends in mind, the Plunge Protection Team. And you never know what those folks might try to pull. So, just keep your wits about you, but this is what it looks like for now. I've given you another if-then forecast. Good luck to you. By the way, in that previous forecast Tuesday, I was talking about USG, and that I had shorted USG for the time being. However, if you look, and it looks like I might be right, because in fact, today, if you're a candlestick person, it did show quite a lot of weakness there. It was down for the day and showing considerable weakness. You might want to take a look at that chart. I don't know if it's going to collapse or not, but I put my money where my mouth is. So, the take-home message tomorrow, if you see it again up there at close to 118 or 117.80, thereabouts, that might be a good time to short it down to this 115 level almost, or maybe all the way there. On the other hand, if you see it breaking down to about 113 or a little less, it's catching that fast ride on that green trend line down to that blue one, and you'll know how to play that, right? Okay, I'm Dennis Hudson, orangequant.com. Thanks for stopping by. Stay